all of a sudden, a great big dong went off. A bell like we hadn't heard before, and the pit went crazy. There's only one topic I want to talk about, and that's losing. That's what you're doing when you trade. You're putting capital where it's most efficient.
You may have seen my interview with Mark Ritchie II of RTM Capital. Well, we have something special for you today because he's going to be doing the interview, and he's going to be interviewing one of the original market wizards, his own father, Mark Ritchie. And they're going to be talking not just about investing, but also how to invest. I think it's one of the great interviews. We hope that you like it.
I'm here today in the Real Vision studio with my father, Mark Ritchie the First, I guess, or Mark the Greater, as he's commonly known, to interview him on a life, I guess, of speculation and trading, investing, some of the different lessons. Let's get right into it. First of all, what your background is, how did you get into this crazy business of speculation? So start maybe just a little bit, if you can, Dad, with your upbringing, and maybe what was different, say, than the conventional upbringing of the baby boom generation.
It is a crazy business. I guess everybody knows that. Your Real Visions people ought to know that. If they don't know that by now, they're beginners. I spent part of my childhood in the Jim Crow South. Another part of my childhood trading kites and pigeons in the streets of the bazaars of Kabul, Afghanistan. And then another part of my childhood messing around here in the U.S. Well, by the time you're done with all of that, you're ready for some crazy stuff. So by the time I got to this business, I had a method of thinking differently. Real Vision's thinking differently. If they put a trader in here to interview his father about what it was like back in the antique days when they had to yell and scream.
So one thing on that note is we're prone, us Ritchies, to go on tangents from time to time. That was a...
You just heard one.
Yeah, that was a good one to get us started. So take things then from willing to try different things to the Chicago Board of Trade yelling and screaming in pits. Some may have read either one of your books, or I get constant questions as if you're still doing what you were doing in Market Wizards that you were interviewed for 30 plus years ago. Talk me through that transition, maybe when you first saw it. How did you realize this was a playground for you? This was the kind of crazy you could get into?
Yeah, my brother and I went to the Board of Trade to visit one time. We were standing in the visitors gallery overlooking the floor. We'd heard legends about how wild the place was. It didn't look that wild to us. You know, a lot of noise, a lot of noise going on, but it just didn't look all that wild. All of a sudden, a great big dong went off. A bell like we hadn't heard before, and the pit went crazy.
So it hadn't been trading yet when you
right.
were watching
It hadn't been trading. We didn't know. We didn't know. They were just passing around orders, getting ready for the opening.
Right. Just jockeying before the.
We were standing above the soybean pit, and the traders went up the side and down the outside, back, down, and over the other side. It happened to be an exceptionally wild opening. We both looked at each other and said, "This is the place for us." It was pretty clear.
And what year was that?
That was 75. That was 75. And
consequently, let me just, was that the jump off point then? To say
pretty much, yes.
So would it be accurate to say that you probably haven't had a salary since that jump off point?
Well, my brother Joe was hired actually by another company to come from Los Angeles, and almost no one from outside the financial industries ever was successful invading them. And he was hired to come and check this thing out. So he comes and sees me. He says, "I don't have a suit. You got a suit?" And he put on one of my suits, and I put on a suit, and we went into some of these people at the Chicago Board of Trade. We said, "How could we get a membership at the Chicago Board of Trade?" The guy just took one look at us when he came to the door. He said, "You boys have got to be at the wrong place."
What was it about what you guys were doing on the floors, and what started, from what I understand, is just yelling and screaming like everybody else to figure things out? Then wound up developing into a pretty large trading enterprise.
We did. We yelled and screamed like everybody else, but we brought to it a mentality of trying to do stuff different, a willingness to do stuff different, not follow the crowd. I don't know how many of the viewers here tune into this station to look for who's buying what. Well, I got nothing against that. But if you're just following the guys who I happen to be long gold right now, you want to use that to develop your own strategy. The cliche that's come around right now is the quote from Einstein, the definition of insanity, doing the same thing over and over and expecting a different result. Okay, fine. Most people who quote these geniuses don't know what they were talking about. Either the geniuses or don't know what they're talking about. I mean, in our business, we do the same thing over and over, and we do expect a different result. And we get it every time, too.
Sometimes, right.
So we went into the pit, yes, with the strategies. We were arbitraging silver between New York and Chicago. But we brought every different idea we could possibly think of to the game.
To do that more creatively.
Right, to do it as creatively as we possibly could. And then later went into soybeans. And there was an interesting, almost illegal thing going on here in the States at that time, and that was the marketing of options on commodities and on, we had options on stocks, but we didn't have any options on commodities. So there were people who bought them retail in London and marketed them retail here in the U.S.
I'm assuming making a ridiculous spread on that.
It was, yes, it was the kind of thing that's only legal because reasonable minds didn't realize what was happening. But it was about as improper as possible, and it got closed down. But it did result in eventually in the options becoming regulated here, and we were primed to take advantage of that. At one point, the biggest option pit was the bond option pit. At one point, there were days in which our firm took as much as 50% of the trades.
Open interest.
In the option pit. I wouldn't have actually been open interest because
right
we
now.
were always going someplace with it.
Right.
We were as market neutral as anybody could ever be.
Taking a lot of the volume.
Right.
And if I understand too, the claim to fame from even your trading CRT was, let's hit as many more or less base hits as possible versus swinging for the fences.
If you want to use the baseball thing,
yeah.
it was get hit by the pitch as much as possible, or go for walks.
Okay, yeah, even less than
or bunts. Yes. Oh, absolutely. Joe once described it as picking up dimes in front of a bulldozer. One of the rules is never add to a loser. That was probably my biggest strategy, adding to losers. I just don't do what I say. Use what I say to try to come up with your own strategies.
So that raises a really good question and transition point on just this idea of losses and risk management. And a question I often get from people is, what did your dad teach you? And usually they're assuming this idea that you have handed me some type of secret sauce. And I often jokingly say, the crystal ball that my dad had in the 70s and 80s is broken because I don't have it. But what I do say that you taught, certainly directly and indirectly, is this idea of taking losses and managing risk. So when you say I was adding to losers, you had a puke point, for lack of a better word, where it was time to throw in the towel. And so could you talk about the importance of risk management, how you think about taking losses, and just why that's so essential, and why you're still around as any form of a speculator, whether it's trader, investor, long-term investor?
Okay. There's a sense in which everything we've said so far and everything we'll say after this, everything we've said so far is warm up to this topic, and everything we say after it is warm down from the topic.
Is icing, yeah.
Yes, because there's only one topic I want to talk about, and that's losing. That's losing. I might be a lousy loser, but I know how to lose. You've got to be a pro to lose. And if you can't lose, you can't play this game. I know we have a joke. How do you make $1 million trading commodities? You start with $2 million. But it ain't no joke. It ain't no joke. I mean, I sat across the table from a guy who his accounts were in trouble, and he wanted me to help him. I said, I can make you $1 million. I did make $1 million, but you're going to think you lost $1 million. He did. I made him $2 million. He lost $1 million, got mad, took his money, and left. Exactly what I told him was going to happen.
Right.
Got furious and left. You even know about one relative.
Sure,
I
sure.
I got him into a deal. I said, I guarantee you will not lose money on this thing. We'll both do it. We'll take profits. I'll tell you where to take profits. And if you lose money, I'll write you a check. Don't worry about nothing. Okay? You know the story.
Yes, I do.
But I'm going to tell.
too personal.
I'm going to tell the story anyway because people need to hear the story. I took profits. I took my profits. I told him where to take the profits. Take your profits there. He calls me back in 6 months when he's turned his profit into a loser and says, are you still going to write me a check?
Right.
That's how ignorant. That's how ignorant. And he's never spoken to me again.
Right. Not only did he lose money, he also lost a
He lost
friendship.
money on that trade.
Right.
But he made money on all the other trades. He made plenty of money
Right.
with me. Never spoke to me again. Mad at me. Got out. Wouldn't take the profits where I told him to take the profits.
Right.
To make money, you got to make two trades. You got to get in and you got to get out.
Right. So the lesson being, let's talk a little bit more on what do you mean by learning how to lose?
I hope the audience doesn't mind if I get a little too excited.
A little animated, yeah. We're prone to do that too.
I get bent out of shape over these things because actually, it used to be pros in my business did not talk about our business outside of the business because we didn't want people to get into the business, not because we didn't want them to make money and take money away from us, because we knew they were going to lose.
Yeah.
And we didn't want them to get hurt. And I originally got into speaking in this business by an investor who said, I keep telling my people not to invest in commodities, and they won't listen to me. If you come and tell them not to invest in commodities, maybe they'll. I did that. That's how I started my thing. So I'm a little bit nervous, but now something. And
now here you are telling people what it takes to be a good trader and investor.
And I know good and well that some of the people who are watching this program are not winning. And I want the guys who are winning to learn why the losers are losing, so they can tell them why they're losing. Either get them to stop trading or stop losing. I don't care which one they do. They either got to stop trading or stop losing. I'll tell you a story here. Guy calls one day. The secretary says, there's somebody on the phone. I said, I never heard him, and he doesn't know you, and you don't know him, but he's got to talk to you. He's got to talk to you. He's got to talk to you. So take this call. I thought, okay, I'll take a few minutes. So I took the call. Guy was a pastor. He knew I was a Christian. He called me up, and he told me a story. It only took him about 60 seconds. I know these stories. I've heard them all over the place. He made a little money, and then okay.
Right, got in trouble.
I told him the rest of the story myself. I said, you took your children's college fund, didn't you? And you lost that. And you took the retirement fund that you had, and you took all your savings, and you lost that, and you've lost everything. Yeah, I did all of that stuff. Yeah, you're a pastor. You talk about integrity all the time, and so forth. And yeah.
Got a little conflict of interest going here.
Yeah. So I said, well, for starters, don't do anything stupid. There was a little pause, and he said, like what? And I said, like taking your own life. And there was a long pause. And he says, oh, you know about that. All of a sudden, there was a connection between us. That he knew, that I knew how traumatic.
This was trying on his soul, if you will.
Yeah, that's right.
So to bring that, so hold on, to bring it back.
I'm going to. This is just I'm just priming the pump. I'm just priming the pump here, because most people who go into trading have no idea that is where this road can lead, and sooner or later will lead there, because we think that the law of averages owes us an even break. It does, that's true. But the law of averages also, it will kiss you. There are times, I've had them, days where you can't make a losing trade. Everything you sell goes down. Everything you buy goes up.
Yeah.
Yes, the law of averages do that too.
And it seduces you.
The law of averages will do the other.
And then it'll take it away, yeah.
Yeah. And if you're not emotionally ready for it and financially ready for it, you're going to make a call like this guy. I mean,
So the idea of how do you
manage these things?
How do you manage these things? Right.
Yeah. I'll give an audience a test. We got time for it, I guess. Say, I'm flipping a coin. Say your trade, you got a 50-50 chance of a profitable trade. Say you win half the time, you lose half the time.
Or an investment. Could be
Investment, trade, anything.
Right.
You know, the beginners always think, well, you buy the thing, shoot, you got a 50-50 chance.
shot. That's right.
It's either going to go up or it's going to go down.
It's going to go down. 50-50.
Right.
Right.
I'll tell you, it's going to go up and down.
Yeah, it's going to do both.
But we got a 50-50 chance. Okay. But when you win, you're going to win more than when you lose. Okay. So when you win, let's say you get a 20% win. You invest $10, you get 12 back. When you win, when you lose your $10. Okay. All right. I'll even tell the audience, I'll lend you $100. But you can start with anything you want to start with. But you have to maximize your profit. How much do you want to invest of this $100? In fact, I'll even line the people up in the front row. Give me each $100 bill. Okay, yeah. How much do you want to invest? 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 And whoever makes the most money on this deal, I'm going to do this 10. I'll let you keep it.
Right.
You've seen the game.
I've seen you play this game, and the result for the audience always works out.
Disaster. Disaster.
Right.
In fact, I'll give you the numbers. Let's say you do $50 on this thing, okay? And
50%,
you win.
50%
you
bet.
50%. Okay, so you win. You got a 20% bump, so you win $60, and then now you have $160, right?
Correct.
You got $160 because you win the first one. Okay, the second one you're going to invest 50% as well. What's 50% of $160?
80.
$80. Okay, so you lose the $80. Now you're down to $80.
Right.
All right, folks. You took 2 shots. Law of averages was nice to you. You won one, you lost one.
It was even, and you're behind.
Yeah, and you're behind. You're down from $100 down to $80. My line is, business schools. They did this at a business university. I want to see the blood draining out of your head.
Right.
Because you think that the way to maximize your profits is to invest more.
Take more risk.
Now, I started talking about creative thinking. Anytime everybody tells you X, you must think Y. You must think Y. If they tell you the world is round, you have to consider that it's flat.
Uh-oh.
You have to consider that it's flat.
We're going down a real dangerous road there.
Yeah, that's right.
But the idea
at least your mind is working.
Right.
Your mind is working.
You're considering it.
Yes, everybody knows that the more you invest, the more you make. So he's investing 50%. He thinks the guy next to him is going to invest 20. And I'm saying you have to think to yourself, at least consider for a minute, that maybe the way to make most money is investing less. Maybe. And try it. Now, if the guy does 20%, he's still going to lose money, but he won't lose as much.
Right, because he's over the size that the edge is going to mathematically allow him to sustain.
First of all, though, the guy investing $50, he says to me, no, you cheated me. I know this is a trick. You're pulling a trick on me.
This coin's not even.
Right, the coin's not even.
He's going to blame it. He's going to blame it on his strategy.
He will blame
or
it
on probability
anything
theory. But himself.
Except what I'm talking about. Because who in this business is focusing on losers, on losing? Nobody. This is the holy grail hiding in plain sight.
If there is one.
If there is one, it's the holy grail. The founder and publisher of Futures Magazine basically said that in his review of this work. He said, just absolutely brilliant.
Oh, and in your most recent book, because
you
you basically lay out in a chapter the idea.
When you get a compliment, you gotta repeat it in these interviews.
Right. Yeah, we're not talking about the fact that our current president endorsed one of your books, because that's not a compliment anymore.
Hey, cut
cut that one out.
Yeah, cut that out.
This idea of finding the right sizing. And this is something that when I talk to somebody else who I know is a good trader, we rarely talk about what position we're in or what we like. It's more about how do you thinking about the sizing?
Yeah.
And how do you size this properly?
Right.
Especially a trade of conviction.
Well, let me finish up about the guy who's $50 because he first of all he thinks I've tricked him, and he says, okay, well you had me win the first one and lose the second one. Then the second one was the big
Right,
one. Okay,
right.
okay, let's try losing the first one.
Right, the other way.
If you lose the first one, you're down from $100 down to $50. Now how much do you invest on this one? You invest 25. And you're winning, of course, more than 25. You get the extra bump, so you get 30. Add the 30 to the 50, and you wind up with 80. That's what you had before, isn't it?
Right.
Okay. So I still repeat.
You've done 2 trades.
You're being
50-50.
trained, getting your master of business administration, and I'm giving you a winning strategy, and you're losing
money.
You're losing money big. And the guy next to you, who's only going to do $20, he's going to lose money too. He's not going to lose as big as you do, but he's going to lose it consistently over time because the law of averages is going to screw him too.
Right. At some point, right?
Yeah,
It's going to be unkind to him, but before it evens out again.
Right.
So,
right. And at some point, you're going to call me, and I'm going to say, "Don't do anything stupid."
Right. So bring it all the way back then. What is the best way for people to become responsible losers? I've heard, I think you make this point, and I've made this point to potential clients, is that I can guarantee you I'm going to lose money for you at some point, but I'm going to do it responsibly. And
Yeah,
how do
that's right.
how do people, traders and investors, learn that lesson? So your point, everyone wants to talk about winning. You're trying to teach people how to lose properly. So
You are going to lose. I promise you, you are going to lose. Any fool can take a profit. Any beginner can take a profit. Anybody can take a profit. It takes a pro to take a loss. Only the pros lose. And the way they
take them properly, I think is,
take a
event,
loss
yes.
like a pro and take the next trade.
right. And now, so talk about then transitioning from there. I think that's a good place to potentially pivot to say, what about mistakes? I've heard you make the point that mistakes should cost you something. And this is related to learning how to lose as well, but it's also
They do.
they go hand in hand. But just to comment on that in terms of as investors and traders, you're going to make mistakes, which it sort of flows out of that last point. That's why you got to be quick to take that loss. But what does it look like in your mind to correct mistakes, to move on, and to keep going, and stay with what is probably a winning endeavor, or even a profitable strategy? So we have the sizing, of course. So talk about
Sizing is everything. Sizing is everything. Everyone who loses money in this business, it never occurs to them that's their sizing that's the problem. How many times have you heard from a guy who gave it up, if I just stayed with it, look at where I'd be now? They're always saying this. My timing was a little off.
right. The reality is your timing is probably always going to be a little off.
I went to one university where they invited me there because there was a rumor that spread around. We heard that Richie's still alive. Let's get.
Right. Yes.
I said
rumors of your death were widely exaggerated. Right.
I said they're accurate. Their timing is off.
Right. Okay, that's good.
And the reason actually there's nothing wrong with their timing. Richard Dennis used to make this point. He invests in it, he buys it, gets stopped out. He buys it, gets stopped out. The 10th time it breaks out, if he misses the buy, that's the one it'll take off. So he's got to have enough money left to take his 9
And his position
losses.
sizing
He was, I gave you an illustration where you win half the time. Most of his stuff he won about 1/10 of the time. When he did win, though, he poured on the gas and kept on going and had a way of staying with it. If you haven't got losing down to a professional state where you can continue to lose and continue to stay in the market and get back up the next day and go back at it, you're just an accident waiting to happen. You've got to control those losses. The stats are, I know, maybe half of your viewers have this. 80% of the people, the armchair investors in this business lose money. Well, that just means the other 20% are making all the rest of it.
Right.
That's crazy. That just means the other 20% are waiting to become part of the 80% the next year. That's a 1-year stat.
Yeah. That reminds me of a conversation that we had when I first made the, I guess, interesting and or ill-fated decision to try this business. And I remember you would hear stats like that. 90% of traders lose money or such and such. And so I asked you about this. Do you remember this conversation? This is
stats in the
But I said-
brain of an academic who's not trading are not worthless. They're dangerous.
Sure.
They're dangerous.
Do you remember your response, though? I said,
Not exactly, no.
right.
I'll be
Well, this
very
was one of the-
complimented if you remember it.
This was one of those
None of your
tangents I-
siblings remembered any of that stuff.
I remember, but I said something to the effect of, the stats say 90% of traders lose money. So that's ridiculous. And I said, well, maybe it's 80, it's 95. And you said, no, that's ridiculous. No traders lose money. You remember this?
Yeah, uh-huh.
And this takes us more to the creative thinking and how you think about things differently. But your response was 100% of traders make money because real traders make money.
Yeah, that's right.
It was sort of this,
Real traders make money, everybody else loses money.
and either they're eventually not trading anymore,
Right.
because if you're still trading, it's because you're making money trading.
The non-traders who make money lose more in the end. They're like the gamblers who go to the casino. If they have a good day, the casino's cheering them when they walk out of
giving them a free
because
room.
they know they're coming back and going to spend all of that and a whole lot more. Yeah. So I know I hate for all of this to be negative, but if your audience has not learned how to lose and lose consistently and lose professionally and lose in a good, sound way, they're not going to have, they'll never be around for those days when everything goes in your favor.
Right. Well, so let's turn maybe to a ray of hope on the other side, then, if you will. I sometimes get asked, what's your dad doing now? And is he still trading? And usually I say he is doing one of his many, for lack of a better word, philanthropic endeavors or adventures. And I think there's a good host of people that are watching that would love to hear more about the way you think about giving back. I had a friend one time ask, maybe not exactly like this, but sort of said, why doesn't your dad just cut a check and put it in the offering plate like everybody else, rather than getting involved? And for those who don't know, you've had operations in South America and done some things in Africa, and in the last number of years been doing microlending in Southeast Asia. But I think a lot of this stems from thinking about giving back differently.
All right, what a topic. First of all, I don't like the word philanthropic.
Sure.
Because it just smacks of those guys. You make a bunch of money and you give it away. In fact, somebody said to one of my critics, I want to be like Mark Ritchie, make a lot of money and give it all away. And he said this as an insult, and it was an insult. I took it as an insult.
Right.
Because that's not the way the world works. Somebody said, I'm sure he doesn't mind being quoted, but I'm sure he doesn't want his name used. Somebody said that Bill Gates had done more for the world than Mother Teresa. That's a provocative statement. Don't quote me on it.
We're borrowing it from somebody else here.
Right. It was somebody else
Just to
who
be
said
clear
it.
for Real
Yeah,
Vision
it was
viewers, I don't necessarily endorse everything
Right.
you're saying. So
Exactly. I don't like the philanthropic thing. And this is the bone I have to pick with these 20 candidates for president right now.
now we're getting political.
I love what they want to do. I love the fact that they care about the poor. I love the fact that they all raised their hands when they said, do you want to provide free health care for every illegal person coming across the border? I love them. Oh, their heart's in the right place. They just have no idea what they're doing. They have no idea what they are doing.
And that's because
That's
they're not thinking about it creatively?
That's right. Well, they're certainly not thinking about it creatively. They've just heard all their academic professors say that 4% of the world has 50% of the world's goods, and isn't that a shame?
Right.
Well, the fact is, I wish 4% of the world had more. They'd have more to invest and share with others. I shouldn't even say share with others. I mean invest with others. Let me back up a little bit. When I say they bother me, I would say if one of them had ever taken a foreign, illegal alien from across the border, put them in their home, got them a job, fed them, got them health care, took them to the hospital, I've done that. I've done that. I will be willing to bet that none of those 20 have ever done it. If they did it, they would look at it more practically. They would look at it really. I have a picture of a child, might be 1.5 or 2 years old, eating food off of the street. If any one of those 20 candidates saw that kid, they would take him to a restaurant and give him a meal.
Sure.
But what would he be doing 24 hours later? They'd be on the plane showing pictures of them giving the kid a meal, and the kid would be back on the street eating food off the street. They have no idea what it's like. If they ever went to a third world country and said, how am I going to invest money here to help things be better? If they'd ever done that, I would listen to what they had to say. So
because they've been a creative part of the solution.
Exactly. If they had done any one thing to be a creative part of the solution, they would suddenly realize that expanding our national debt in order to bring more people across the border is not a solution. It's only aggravating a problem.
Right. So before we get all the liberal viewers to tune out, let's.
I started by saying I love them. Their heart's in the right place. I know exactly what they want to achieve.
Let's take it back to this idea. Okay, so what does it look like to invest yourself and your money? Because what I just heard you say, I think, is it's going to require more than just money.
Of course. Yeah, it requires all.
Maybe we should talk about the microlending issue, because some people would say this is something you call it barefoot banking. This is something you have gotten involved in a rather grassroots way, and some people would say, well, why in the world is he not giving the money away? He's lending, charging interest.
Yeah.
Talk about that as an example. I think this is a good example of, I think, what you were trying to communicate before.
Do you want everybody in the world to drag out a tin cup and say, give me some money? If you go down the street and start handing out money, that's what you're going to get. That's exactly what you're going to get. I was touring in this Southeast Asian country with a pastor who wanted me to introduce him to the place, and we were walking down the street, and here's a little old lady shoveling sand into her granddaughter's basket, and her granddaughter's carrying it up a couple of stories. And I got excited, and I started taking pictures of her, and I wanted to get some pictures of myself with her. And this pastor saying, what's the matter with you?
What are you doing?
Yeah. And I say to him, if she wasn't doing this, she'd be down there in the corner begging from you and me. And she'd probably make more money begging, as long as there are wealthy people coming along doing it.
Right. But she's being productive.
Yeah, and she's being productive.
So you're essentially saying, I'm trying to incentivize people to be productive. I'm providing the lubricant to the system.
Exactly.
To allow people to be productive.
Exactly. That kid, that kid eating food off the street doesn't need somebody to come along and give him a meal. He needs somebody to employ his parents in some kind of an operation.
Productive operation.
Exactly. And we have lost, I can just guarantee you, we have lost this whole concept. We have no idea about this.
You're speaking about the U.S. now.
I'm talking specifically about the U.S. The U.S. doesn't realize that we need to be more wealthy. I went to one of these bazaars, and I talked to the lady who I had invested a lot of money in and given a lot of business to, and I said, "Where's all your competition?" She said, "They're all gone. They're all gone, because we don't have anyone in the West that's coming and buying our goods anymore. Why? Because the West is not wealthy enough." Because the West has been so focused on closing the gap between the rich and the poor. Remember I said,
oh boy, creative thinking, here we go.
Yes, whenever you hear something, we need to close the gap between the rich and the poor.
Question it.
Try the opposite. Just try the opposite.
Or entertain the opposite is what you're saying. Be willing to entertain the opposite.
Consider it.
Right.
We need to expand the gap between the rich and the poor. Do you want the people writing your check to be poor? No. And we have no understanding of this. Absolutely no understanding of this.
So let's use the banking. Let's use the micro lending or barefoot banking example. How is this actually working and helping?
I'll tell you one. A lady, she doesn't have the $10 she needs to buy flowers to go out on the street and sell them.
So this is one example. $10 loan.
This is a real example.
The definition of a micro loan.
Real example,
Right.
yes.
$10
And
loan.
at the end of the day, you know what she owes the guy? Take a guess. She owes him $12.
20%.
Yeah, 20% for a 12-hour day.
How much does she make?
Now you see,
Hold on. How much does she make on the $10 loan?
I don't know. I don't know what she makes on the $10
More to
loan.
cover. Certainly
Yeah,
more
yeah.
than she needs to cover what she owes.
Probably not. Probably not. She probably comes out behind. But listen, okay, you guys don't like stats? If I show you the picture of the kid eating off the street, that'll bring tears to your eyes. But this ought to bring tears to your eyes, that she owes $2 at the end of the day. Because I can make that loan and charge her a penny and make money.
Right.
When I mention this to anybody, you know the first thing they're going to say? Your interest rate's too high.
Right.
And my response to that is, bring your money and lend it out
Yeah,
and lend us.
compete,
What's,
yeah.
what's the matter with you?
Right. Get over here and bring the spreads down.
They think I'm mocking them. This is how ignorant America is of the whole method of free enterprise and capitalism.
So
Absolutely
let's
ignorant.
going back there again. Let's use those. You lend out a bunch of small loans to people who are willing to be productive. What's the default rate on those?
1%.
So
I know you're going to believe that. I don't blame you for laughing. I know you're not going to believe it, and nobody does believe it.
nobody believes it because
Yeah, no,
nobody
no, no. Of
nobody
course
over
not.
here would
Of
ever
course not.
believe that you can have default rates that low. Why do you think that is? So if you lend out, how many loans would you guess you've done?
500.
500 different people,
Yeah.
or just all kinds of
Not all of them to different people. No.
Okay.
No.
So hundreds of loans,
We're
or
probably,
maybe over
up,
thousands?
We're probably up toward 1,000 by now. So I'm not positive about
Right.
my 1%
Well,
default rate.
Sure, but it's close. It's
Yeah,
very low.
Yeah.
Why do you think that is?
The main reason is because they don't know it's foreigner invested money. They believe that it's money that's coming from a fellow citizen. Because once they know the money's coming from somebody who doesn't really need to get paid
So you
back.
need to empower the locals to lend.
Exactly.
Right.
Exactly.
And to create
the
access.
local guys can
capital.
lend to each other, and they know that they're going to have to be paid back, and they're willing to take it out of their own pocket if they're not. So I'm saying that these people, you show me a poor lady with a couple of kids, I'll show you the best place in the world to invest. When you brought up the whole point of philanthropy, I don't like the word, because philanthropy means you write out a check and you send it off to somebody you've never met, and you have no idea how much of it's getting there. And I can guarantee you, every one of those not-for-profit organizations, they have 17% of what goes to overhead. Nonsense.
Right.
That's an academic. That's
we're-
an academic joke.
We're going to start treading into dangerous territory again here.
Settle me down here.
Yeah,
Settle me.
try
Yeah, it's a disaster.
So the idea of we got that investing, we want to invest in the poor if and where we can, and obviously, to your point on if that doesn't stimulate creative ideas for how to help, that will do that job better than anything else.
This will get your audience thinking, and they should be doing their own thinking anyway. Set something up where you're making money off the poor.
Oh boy.
Yeah. Oh boy is right.
Enough to your point earlier. So enough so that you can continue to reinvest in them.
Of course.
Right.
The money's never going to go anywhere. I know you want the money that I'm lending to those people to be consumed doing something good.
Right.
To be
Be
consumed.
productive. Right.
No, my money's never going to be consumed. It's always going to be there doing the same thing, working. Gordon Gekko, or whatever his name was, in Wall Street. It wasn't a film writer's line when he said
Greed is good.
Yeah, he said it was Ivan Boesky's line.
Stole it from him, right.
To the Stanford Business School. Greed, for lack of a better word, is good. That's exactly what he said. Well, shoot, he's a capitalist. You can't expect him to be a linguist and get the right word. But it's a terrible word. It's a disgusting word. I know all the socialists in the world don't think they have greed. They think the problem with poverty in the world is answered by generosity. And that is backward. That is backward. Greed is answered by generosity. Poverty is answered by productivity. And they don't like that because when they hear the word productivity, they think greed.
I think greed. That's a
I'm
really,
a productive guy.
Right.
But I'm not greedy.
So let's transition and try and whittle this whole thing to a point. One of the things talking about being productive, I've heard you as a regular advocate for people to continue to trade and to speculate, bringing it all the way back sort of to investing in creative thinking. Where some will say, how is that helpful? How is speculating on the price of oil or a future price of a stock, long or short, how's that helping anybody? And you have long been not just a defender of this large endeavor we call speculation, but encouraging people that their work is not only productive, but it's needed.
What's your justification for being in business? Is that fair enough? Yeah. And it's true that most people who do it don't know what their justification is for being, so I'm going to give it to you right now. There was a guy wanting me to buy his stock one time. They had some stock. And I said, well, what are you paying to buy the stock back? I think they were paying $0.50. And I said, well, what are you selling it for? He was selling for $2.50. I said, well, what are you doing to that stock? Between 50 cents and $2.50 to make it go up 5 times in value. And there was a long pause. Well, we don't do anything to it. It just happens to be our spread.
Right. That's a charge for our fees.
If you
our
walk
services.
down the street, you buy a Cadillac, or you pay $50,000 for it, and you come back the next day to sell it back, what are they going to buy it for? $40,000? I don't know what it is, but a $10,000 spread. In the market we trade, what's the spread between the bid and the ask? Microscopic.
Thin.
Microscopic. You're providing a market. And when I buy wheat, I'm an investor in the wheat farmer. I am doing something very productive. I'm putting money where it's needed. If I'm making money, if I'm not, I'm contributing some other way. And that's what you're doing when you trade. You're putting capital where it's most efficient. And the reason you have a short loss on the thing is because you're dumping it when it proves that it's not efficient. You're selling the stock that's lousy, and you're buying the stock that's good. Whether it's stocks or whether it's grain or no matter what it is, you're providing efficiency in the marketplace. And if you weren't there, the spread would be wider. It would be more costly. And for the people who say you're wasting your time, the markets are efficient, it's all a rig and all of that stuff, what percentage of those people know what they're talking about? Every one of them is an academic in an ivory tower someplace. They've never done any trading. They've never done anything. They've never gone out and lent any money to anybody poor. They've never taken a refugee into their home and resettled them. They've never done any of these things. If they'd done those things, they would begin to have an understanding. They'd start scratching their head and say, oh, I think maybe Richie's making some sense.
I've got to change my worldview a little bit.
What sounds crazy is really maybe accurate. Or at least rethink it a little bit. At least do what I'm saying. Consider the other view.
Maybe as a closing thought on your last point about why you continue to encourage people to put their money where it's productive. Give us that as a parting.
Yeah, I made a lot of money shorting that stock. I'm not going to mention what stock it was, but it was a company that gave me a lousy deal. And I even said to them, if I had purchased this from Walmart, they would give me my money back and not ask me a question. And suddenly the scales fell from my eyes, and I thought to myself, why would I ever be buying from this company again? I immediately went out and bought puts in that company.
Bought puts, sold short, and then
I made 30 or 40 times the price of the computer that I got stiffed for. Yeah, right.
And your point being that the world is a better place.
Exactly. The guy who said greed is good, he meant profit motive is good. There's nothing wrong with profit motive. Absolutely nothing wrong with profit motive. And anybody who thinks otherwise doesn't understand what's happening. I'm not being philanthropic. I'm investing. in lives. I could not be more committed than to the refugees that we're bringing into our country. These guys come from Asia with broken English, barely able to speak English, and in 4 years they're graduating valedictorian of their class. I mean, these are the kind of immigrants I want in America.
Well, invest in, yeah.
Yeah, and the kind of people I want to put my money behind and invest in, and that will produce, you can't measure the profit on that. Impossible to measure the profit on that. I've also made the point, you can't measure the cost of corruption, and you cannot measure the cost of corruption. And you think, and corruption is bad in our country. You think it's bad in our country. You ought to see it in other countries.
It's somewhere else.
I had to decide, is the stuff that I'm doing with these poor people, it doesn't take a lot of money to invest in a poor person, is that more important than retooling myself in order to recover from this?
From losses.
Yes, this Ponzi schemes. Well, it wasn't just a loss.
It's another loss, another mistake.
Yes. But I discovered I can come back from that without having to spend 24 hours a day batting my head against a wall. I woke up one morning, didn't have anything in the market to check. First time in 25 years that had happened. And I said, this feels good. I won't have to write on my tombstone, he bought low and sold high. I can write something else on there. I can invest in these kind of people and use my stuff to invest in places that I thought were far longer range. I'll be dead before I see the results from it, but far more rewarding.
I think that's as good a place as any to end. And I want to thank Real Vision for giving us this opportunity and for letting us entertain some of your thoughts and ideas.
Entertain being the operative word.
Welcome to the end of the video. We know that on average, 85% of you who start a video on Real Vision finish it. That's extraordinary. On Facebook, it would just be 4%. And that's because Real Vision creates the most engaging content in the entire media world. Let us help you grow your business by making video content that really engages your customers. Email us at customvideo@realvision.com.